Hey everybody, I'm going to do another Kaspa video because we're sort of at an inflection point right now. And I want to go over some of the things we've already talked about, but also maybe some developments that took place just over the past few hours. The first thing is, here's the entire trading history of Kaspa at MEXC. We've talked about it before. We are in a rising channel. We did sort of break down a rising support line that was on the upper side of this blue rectangle or this blue channel. We came down and then we started to move back up. And I think that there's a decent chance that we simply stay in this blue channel. I don't think we are necessarily going to power back up into this region that we were in previously. Could happen, but a lot of times you'll see charts of stocks, ETFs, and indexes. You'll be in a rising channel, then it looks like it breaks, but then what you're really doing is you're just sort of changing lanes. And I mentioned that the support line that was operating for about 6 months is rising at the exact same angle as the support line that we've seen over the past 2.5 months. Okay, let's zoom in a little bit. We had a very small inverted head and shoulders pattern right here. And at the time, that pattern had a target of about 2.1, maybe 2.2 pennies. Okay, and I want you to notice that we came up to that level and then we moved up even higher, exceeding the target by about double of what that target was originally thought to be. Now, if you'll notice, you'll see there's that little dip, a bigger dip and a smaller dip. And if you look over here to the right, we've got a really large thing that is almost exactly the same shape as what we had back here. And we have broken out above this purple line that I'm pointing to right here. That's called the neckline. And the way you measure a target from an inverted head and shoulders pattern, or a head and shoulders top for that matter, is you measure the depth of the pattern from the neckline, and then from wherever the breakout takes place, you use that as a measuring stick, and that does not point you to the maximum target, that points you to the minimum target. Remember, back here we had a minimum target just about 2.1 cents. But as you all know, we ended up getting up to almost exactly double that at 4.2 cents. Another thing that's kind of interesting to note, in this particular chart, I have erased a line. We were in a descending broadening pattern. And what's interesting to note is this right dip on this inverted head and shoulders pattern formed on a back test of that broadening pattern. So if we put this like that, well, actually, I think the broadening pattern started back here. And we snap that line there, you'll see that basically we broke out over this dark green line. Then we back tested it. Then we came back up to this purple neckline and powered up over it. Now let's zoom in a little bit more. Let's look at a 30-minute chart. You can see that after we broke out over this purple line, we formed a consolidation pattern, and that pattern was a triangle, and that triangle had a slightly downsloping upper line. And we made one little attempt at a breakout over that, fell back, and then I think it was probably on, was it August 2nd? Well, anyway, we broke out of this triangle. That triangle, by the way, we measure the same way as we do an inverted head and shoulders pattern. We measure the depth of it right there. I don't go all the way back to here. I go to where you basically sort of into the meat of the pattern. That gives us a target, and that target was at 0.048453, and you see that just yesterday, early yesterday, very early yesterday morning, if you're on the East Coast of the United States, that target was met. So now we are in another consolidation pattern. It is a triangle, but here's where it gets a little ambiguous. I do not know if this triangle has this line as its support line, or whether it incorporates the support line in this much smaller triangle that formed and broke out on the 2nd of August. Sometimes you find patterns inside of patterns, and sometimes you don't know really where the delineation is between a large pattern and a small pattern that is embedded in it. So in other words, this line right here might not be necessary. It could be that this is our support line right here, and this is our resistance line right here, in yet another triangle consolidation. Originally, I thought this was probably the line, but from the behavior that I'm seeing today, I'm not seeing anything that's really behaving like a breakdown. I'm seeing just very lazy trading, and I find that interesting. A lot of times when a triangle breaks, it breaks with with some strength. It breaks with maybe the word I'm looking for is with gusto, with conviction. It really can break down in a fairly tumultuous way. I'm not seeing that here. So I don't know if we are looking at this blue triangle starting to break down, or whether we're just coming down to this orange line, at which point we may see a significant rally. I'm not sure. Now, let's talk about worst case scenarios. People are posting in the different trade groups. They're asking, like, where is support? Where is support? Well, a lot of people will look at it and they'll look at a Fibonacci ratio, and they'll say, well, we have a Fibonacci support level at so-and-so. We got the 50%. We got the what is it? I can't even remember them. But you've got different Fibonacci levels, and oftentimes those things do tend to work out. But I tend to look more at support lines. So as you look at this chart right here, I would say that any line that is underneath us, including this red line right here, that any line that is underneath us is a potential level for support. Even to some degree, this blue one, even though we're sort of toying with the idea of sort of snaking around it a bit. So we could see support at this orange line. We could see support at this blue line. We could see support at this lower blue line. We could see support at this red line. And I want to caution people here, as well as Kaspa has performed, and as amazing as the technology and as profound is the thought that has gone into this by the core developers. The things that drive the chart are the traders. And it is a normal thing to see a broken line of resistance eventually getting what's called a back test. Doesn't always happen. It often happens. So what I'm saying is, when we broke this red line right here in this triangle, there was no back test. And what I'm saying is, it is possible that we back test this line. and that would be a trip down under 4 cents to 3.8, possibly, even if it happens well into the future, possibly 3.7 cents. Additionally, other than this little small back test that we had back on July 23rd, we didn't really see a very deep back test of this broken inverted head and shoulders neckline. I think this might be sufficient. If you were in the channel at the time when we got down to about 2.65 cents, I think I made the mention that there's your back test. And it could very well be, but it's a fairly shallow back test. And when you look at the scale of the pattern, you can see it's just an up and a little quick down. A lot of times back tests take place over a larger time frame. As an example of yet another back test, about the same size, however, is this orange line right here. We broke over it and we back tested it, and then we were off. Got over the neckline, little back test, and then we were up. So far on this red line of this triangle, no back test yet. If you look at the chart, we just blew straight. I'm sorry, my software is not that elegant. I have to kind of scroll in. We just blew straight up through that line. So for right now, what am I looking at? Well, I'm content to begin with to hold my Kaspa. I'm not looking to sell. Not at these levels. There will be a point where I will be looking to sell. But it's not where we are now. So if you're a bull, what you want to see happen, obviously, you want to get up over this blue line. And if we get up over that blue line, then we would look at this pattern and we would measure the depth of it. And we would say, more than likely, we would have a target at about 5.2 cents getting over this blue line. But I will remind you that the real target, it's off the screen. How do I get it on the screen? I think I have to go to no, that's not doing it. Why is my chart is acting really weird here? Hold on just a second. I know the fix for it. I have to go to another exchange, then come back to this. There we go. The pattern, this inverted head and shoulders pattern, still has a target up here at just under 7 cents. What we don't know is the path. We don't know how we're going to get there. We could have gone straight there. We could go up, come down, go up, come way down, then go up. Or we could do what we're doing so far, a little downward motion, and then a move up to that target. Really, as long as we stay north of this purple line right here, currently at about 2.5 cents, as long as we stay north of that, that roughly 7 cent target remains in place. It would take something pretty catastrophic at this point for that target to be in question. And again, I remind you, as the words come up on the screen there, that is your minimum target. Remember last time we had an inverted head and shoulders pattern, we doubled that target. Not saying that's going to happen this time, but what I am reminding you of is it is a minimum target. To give you one more quick example, and I know I've been talking quite a bit here. In 2009, the S&P 500 formed an inverted head and shoulders pattern. The lowest level in that pattern was 666. The neckline of that pattern was around, I want to say around the 900s. And it formed over many months. And when it broke out, the target in the S&P 500 at that point was 1,340. Where are we now in the S&P? We're around 4,500. So again, targets are often exceeded. So keep an eye on this. Just wanted to get this out to you. Again, that there's levels that we could come back to here that might be painful to see, but I want to encourage you to keep your objective hat on and not be emotional. Be strongly intellectual about this and realize that when you're looking at this chart, you're not looking at just random price movements. You're looking at human behavior, and humans haven't changed that much. I'll say this about crypto. I think there's more immature humans involved than the type of people that you typically would see investing in stocks. But human behavior is still human behavior. These patterns still show up. So be objective about it. I want to encourage you to do that. Don't freak out if we have 2 or 3 days where it looks like the wheels are coming off the wagon. I promise you this. It will happen. And it will probably happen within days or weeks. But take a look back at the chart. Don't get hyper-focused. There's my thing doing its weirdness again. Hold on. Do not hyper-focus on the last 24 hours. Don't hyper-focus on the last 48 hours. Don't even hyper-focus on the last week. Routinely take a look at this chart and remind yourself of what these patterns represent, where their minimum targets are. And I'll add to this, no chart is 100% predictive, but an inverted head and shoulders pattern tends to have a success rate approximately 75 to 85% of the time they do what they're supposed to do. So I'm not offering this as investment advice, but I'm just telling you that that these patterns have a rich history in crypto, in stocks, in everything that's ever been traded. You go back to trading rice in Japan. That's where candlestick patterns had their initial discovery. So anyway, that's enough. I've gone on way too long. Thanks for taking time out of your day to watch this. And if you enjoyed it, I'm going to put a Kaspa address down in the description of this video. And, if you want to, I would appreciate it. If not, I totally get it. Take care.